How to use CapitalRise investment app properly. Beginner mistakes that cost you. CapitalRise lets you invest directly in luxury real estate developments, the kind usually reserved for institutions. But beginners often misuse it and end up with lower returns or higher risk. The first mistake is skipping project due diligence. Every listing includes details on developer track record, location, and expected returns. Don't just focus on the yield, examine the security type and exit term. Next, many investors overlook liquidity. CapitalRise investments are fixed term, meaning your money is locked until the project ends. Plan accordingly so you're not forced to sell other assets unexpectedly. Another mistake: not diversifying across projects. Even though these developments are high-end, spreading your capital reduces exposure to any single project delay or market downturn. Pro tip: check the loan-to-value ratio on each deal. Lower LTV means the project is less risky because it's better secured by the underlying property. And here's what most people get wrong: they think real estate crowdfunding is passive. It's not. You're still choosing where your money goes. Used properly, CapitalRise helps you build a premium real estate portfolio that earns steady income while supporting landmark developments.